in the Mortgage Cellar, and we are with the Mortgage Mom. This is Deanne Katsaros, and she came in to the cellar to talk to us a little bit about loans, mortgage loans, and
Absolutely.
how she helps people get into homes. So first, tell me, why do they call you the Mortgage Mom?
That's a great question. They call me the Mortgage Mom because I basically treat my clients like family, which means
Wait, you don't have 100 kids?
I do not have 100 kids.
Do you at least have one kid?
I do.
Okay.
I do. I have one amazing kid, and he's actually in the business with me, and he's been doing an amazing job. It feels like he's been in the business since he was 2, because sometimes it's so funny, Dawn. Sometimes I'll ask him, like, how did you know how to say that? And he's, Mom, I've been listening to you since I was 2 years old.
And you think they're not paying attention?
And you think they're not paying attention,
But
is
they
right.
totally are.
Yep. But Mortgage Mom just basically came about because if somebody's not able to purchase a home now, we're able to take them through the process. So it might be credit, it might be assets, it might be budgeting. So I'm caring for them to get them, I'm holding their hand through the entire process.
That's awesome.
And it kind of stuck.
All right, so you have a radio show on WPHT out of Philadelphia. How long have you been doing that radio show?
We've been on the air, it's called Good News in Real Estate, for about 13 years. So we're on our 925th show.
Wow.
Yeah.
And what made you want to do that?
I didn't.
Oh, okay.
I never wanted to be on
Because
radio.
I'm a radio person. I love radio. And so, you know, here I am sitting in front of a camera, but I
Right.
just love the radio. And so who talked you into it?
So friends of mine in the real estate business asked me to be a guest on this show. And I said reluctantly yes. So I said, you know, can we stop and get a martini on the way, just because my nerves are shot. So they said, don't worry about it. It's going to be live. There's probably about 3 million people that are going to be listening. So just go for it. I'm like, are you kidding me?
Philadelphia's major market.
I
mean,
know.
you just start off. I had to start up in upstate New York. I had a listener, but you have like a lot of listeners.
No, we do. I went and I did the show, and when we walked in and put the headphones on, I was addicted.
You're hooked.
So we're on every week.
That's called the radio bug.
It is.
We call it that. I love the radio bug. And then I heard you were on HGTV also. So tell us a little bit about that story.
So the same person that talked me into going onto the radio is the same person that said, you know, HGTV reached out to us and they want to do a process from beginning to end, meaning walking into the house with a buyer, going through the loan process, going all the way to closing. And we did that. They came out, it took about a week to go through, you know, taping everything. And the funniest part was we were in closing and there was a fly that was flying around the room and it landed on my nose. And they didn't,
Is that good luck?
I don't know what it was, but I kept trying to go like this to get rid of it. And finally they had to just like cut, but it was hilarious. But it was a great catapult for my business because a lot of people watched the show and they saw how easy the process actually was. So it worked out well.
Well, that's great. That's a super fun story. So tell me now, are you a mortgage banker or a mortgage broker?
So with my company, Green Tree Mortgage Company LP, we are a direct lender, which means we fund our own money.
That makes you a mortgage banker.
That makes me a mortgage banker. Now, if I was a broker, I would be going out to 5, 6, 7 different companies and shopping around for the best product. I'm not a fan of that. My company does an amazing job. So being an in-house lender gives us the opportunity to do everything in-house.
So you have more pull as a banker.
We do.
And you have more flexibility so that if somebody had a strict deadline, was up against a really tight deadline,
Right.
It's a lot easier for you to control that process and say, you know what, I don't want them to lose their earnest money.
Right.
I can close this loan on that date because it's our money.
Correct. And I'm making a phone call telling my processor, telling my underwriter, who I've been working together with for 15 years, they know, like we have a routine, we're like family. So when you go into a broker and I'm gonna go deal with another company, I don't know anybody in that company. And so I'm putting everyone's commission in jeopardy. Not only that, but I'm putting the homeowner in jeopardy of whether or not that's gonna actually close. So
That's a scary thought. And I always think about that because when you're not in control of the process,
Exactly.
it is really frightening, especially when you think about, oh my God, I put down, you know, every last dollar I had,
Right.
thousands of dollars for earnest money.
Right.
And if I don't close on the on or before date, then
I've jeopardized all of
Yes,
that.
right. I could lose the entire thing.
Right.
Now, I want to ask you this. It's very, very hard to get a home right now. A lot of people are having a huge problem if they don't have cash and they can't get their offer accepted.
Right.
So the reason I wanted to have Deanne come into this show is to talk specifically about this problem. So if you have made an offer recently on a home and you've been rejected because you didn't have cash and somebody else did, listen up.
Right.
Tell us how somebody can win a bid.
And thank you for the opportunity to talk about this, because this has been a game changer. I mean, you have people that are first-time home buyers, that want to have their dream home, and only to go out and put 5, 6, 7, maybe even 10 offers in on a property, and only to be that offer gets denied. So we try to level the playing field, and what I mean by that is, I have an investor that I'm working with personally that has allowed us to put in offers as cash, and he backs that offer with cash.
Wait.
So go ahead.
So wait.
So go
Okay.
ahead.
All right. Back it up. I don't have the cash, but I can make a cash offer.
Right.
All right?
Right.
And you guys put up the cash.
Right.
What's the catch?
So there's no catch.
There has to be a catch.
There's no catch. So what happens is you get, let's say you're looking to put an offer in, okay, and you're a conventional buyer, 10% down. So your offer on the top of the chain is probably going to be here, right? Because you're going to have 20% down, waiving contingencies, waiving things, and your offer is probably not going to get looked at as favorably as someone else.
Right, because you don't have enough cash saved up.
You don't have enough cash.
Yeah.
So you've already been completely pre-approved, not pre-qualified, but you've been pre-approved with my team, which means we've collected everything but a DNA sample. We have your bank statements. I'm kidding, but we have your last 30 days of pay stubs, tax returns, W-2s, everything that's needed to get pre-approved.
So you know that they can afford this house
100%.
because you've already checked them out.
Correct.
Right? You had the tax returns, you've done the whole
Everything.
colonoscopy, you're all good. Yeah. All right.
We've done a verification of employment, everything that needs to be done. The only thing this family needs to do is actually go and find a house.
Yeah, that's the hard part.
Right. So conventional buyer, 10% down. Now, my investor will go in and back this offer with cash. So when you go to put your offer in, Dawn, we're sending a proof of funds letter. We're checking the box that's waiving the mortgage contingency. So if the financing should fall through, my investor is purchasing this home with their cash.
All right, so back it up. This is not a cash offer. It's waiving a mortgage contingency.
We're going in as a cash offer. If this financing falls through, we're closing on that date with cash. Now, in the background, we're still getting an appraisal. Mm-hmm. We're getting a home inspection for informational purposes only. Mm-hmm. And we are making sure that all the I's are dotted and the T's are crossed. They're going through the loan process.
So it's an insurance policy in a way.
It is. That's a great way to put it. But I'm communicating with the buyer's agent, with the listing agent, letting them know that it says that we can still show up with financing. So at the end of the day, the seller's not worried about how we're coming to the table. Are we coming with a bag of cash, or are we coming with wired funds?
So, in other words, so if you have been rejected for a home loan and you can't get one and you're like, oh my God, I put like 10 offers in already and I can't get a home loan, then you need to call up Deanne and you need to say to her, help.
Right.
Yeah, and she'll do it for you. She'll get it all done for you. But wait, can you lend in every state?
I can lend in Florida, Delaware, New Jersey, Connecticut, and Pennsylvania, and we're growing. But when we started this, you said, "What's the catch?"
Yeah, what's the catch? There's gotta be a catch.
So the catch is that the buyer pays a 1% reservation fee directly to the investor. Mm-hmm. So let's say you're purchasing a house and it's $400,000, a $4,000 fee, right? 1% of the sale price goes to the investor, and in return, the investor gives that proof of funds letter along with the statement to be able to win the offer. Now, you and I know.
What if I don't use the cash offer? What if the mortgage gets closed on time? Do I still have to pay the 1%?
The 1% gets you that proof of funds letter. Okay. That's what that gets from the investor.
Okay.
If your offer's not accepted, then that money gets refunded to you,
okay,
or the investor keeps it for the next one. But if you get that offer and we still close with financing, the whole reason that you got that offer accepted was because we went in with cash and proof of funds.
Can I finance the 1%?
No.
I can't. I have to have 1%.
Correct. And that can be from a gift. It can go on a credit card. I mean, that's the investor side. I have nothing to do with that.
If it goes on a credit card, then I'm financing it. Does it affect my pre-approval?
It does not. It does not. Now, we tell people not to make major purchases. So it's going to be a case-by-case basis if they need to do that. Obviously, we would rather see it come out of their bank account and go directly to the investor. Again, just making sure you still have enough cash to close.
Cash to close. Yeah. All right, now, so I gotta back it up here. You said don't make a major investment. All right?
A major purchase,
A major purchase.
Right.
Before buying the home.
Correct.
Don't make a major purchase before buying a home. How many times? How many times has it happened to you?
So that could,
someone bought a car.
That could be a show on its own. So
it happened to me once.
2 weeks ago, we had we used the cash offer. We got the offer accepted. It was an FHA loan. A week before closing, the husband loses his job. 2 days later, they make a major cash deposit into their bank account. Now, fortunate enough, again, being a lender, right, being a banker, we ran in, took the husband off, made the adjustments that we needed to make, and we were still able to close in time. But, I mean...
Did you have to use the cash offer?
We did not. We did not. We closed it. I know. I didn't sleep at night. We have 10 commandments.
Yeah.
And I'm telling you, this is a show all in itself, but we have the 10 commandments of everything not to do when purchasing a home. Right. Don't buy a car unless you plan on living in it, right? Don't change jobs and forget to tell me, because that's how we found out.
Yeah.
We called to do a verification of employment 3 days prior.
Don't drop 10 grand in cash in your bank account one week before the closing and not have a chain of custody.
Exactly. Need to source it. But luckily, again, team went right into action and we were able to get it done.
I know why, but explain. Why do you have to source that big cash deposit?
The big cash deposit? Because the underwriter needs to know where it came from. Did you take out a loan for this?
That's why.
Did it change your debt to income ratio? So that's the reason. Now you can get a gift, right? If my mom or dad or somebody...
But you have to have a gift letter.
You have to have a gift letter, and we have to show the gift funds being received and where the gift funds actually came from.
Yeah. Oh man, I mean, I remember a deal I did, and they had to get a new lease. Their lease was up.
For the car?
For the car, and they went out and got a way more expensive lease.
Of course they did.
1 week before the closing. I was sweating bullets, man. I was like, why?
Now see, and that's why, my team is amazing. And that's why you need to make sure that everybody gets pre-approved and not pre-qualified. Because when you go to
Explain the difference,
So
please.
there's a major difference in pre-qualified. I spoke to you on the phone. I may or may not have ran your credit. You told me you have a job. I have no pay stubs. I have no bank statements. We had a general conversation, and I said, sure, you're pre-approved for $300,000. We'll send a pre-qualification letter.
So my dog can get pre-qualified for a mortgage, but a pre-approval?
It is a pre-qualification is not worth the paper that it's written on. Yeah. A pre-approval means you've taken the steps to solidify the financing, right? We have a 2-year history of your employment. We know where your cash to close is coming from. If you're an hourly employee, we went and did that verification of employment. Or if you're on bonuses, we know that you're receiving it for 2 years.
Yeah.
Same thing with commission. So especially in this market, you have to do your due diligence. You have to go in as a strong buyer. Now imagine if we did this cash offer and I did it with somebody that was only pre-qualified. I wouldn't sleep at night. And my
your
investor would be knocking on my door
Your
ready
investor
to kill
would
me.
not be your investor.
He would not
They would
be
be
my
like, wait,
investor.
no, I'm not giving any money for that.
Yeah, exactly.
So I think that this is such a very cool idea. There are other companies that do it, but the way you're doing it is a lot more personal. And I really like the fact that you're being very personable about it, because you care about that person's money, because they're
Sure.
not just going to be risking their earnest money deposit, they're also going to be risking their 1%.
That's exactly right.
Yeah, so
exactly
so
right.
that's a big responsibility
Yeah,
for you.
it is.
And I can understand why you might not sleep at night with some of those, but you are able to get people qualified for an FHA or USDA. Have you gotten anyone qualified for FHA or USDA in the last year?
Absolutely. And again, it's pre-approved. But yes.
What's the difference between USDA loan and an FHA loan?
So with a USDA loan, there's a couple things. It's based on the property, so it has to be in a USDA eligible area, which means you go onto their website, you put in into the address, and it'll tell you if that area is eligible. Now, if you see lots of golf courses and lots of cows and farms, that's probably going to be an area that's USDA.
Because it's called rural development.
Right. So what happens is you also have to go through a small list of questions on the website. How many people are living in the household? There are income limits that you have to qualify for.
Those are top limits, not bottom limits.
Not bottom limits, right.
The USDA will give you the money if you make too little, but not if you make too much,
Right.
which is the opposite that you would think.
Correct. Correct. And there's also loan limits in the area along with FHA. Now with FHA, everybody thinks FHA is just for first-time home buyers, and it's not. You just can't have two FHA loans at the same time. And it's only for a primary residence as well. You can't use an FHA loan to buy a second home or for an investment property. Same thing with USDA. Now USDA is 100% financing, which means there's no down payment. When you do an FHA loan, you need to put at least 3.5% down.
What does FHA and or USDA say about the 1% you paid for the cash offer?
So they're not looking at that in per se, because what's happening is you can't have somebody that's not related on the agreement of sale with an FHA. So what we've done is we've been able to get the offer accepted, and we've assigned the contract.
You assign the contract to the investor?
Well, we assign it to the FHA buyers.
Okay.
So, and again,
So the investor gets the contract,
right,
and then it's assigned to
only-
the FHA buyer.
right, only on FHA. On
Okay.
FHA. And remember, everything's being disclosed. This isn't something where we're trying to, get over on the listing agent or everything is disclosed, and they understand it, and they actually think it's a great idea.
So points, you know what points are? Let me just explain.
Sure.
Points are, 1 point is 1% of a loan, and typically if you have a mortgage broker, you would pay points as part of the cost of doing the loan.
An origination fee.
Origination
Exactly.
fee.
Yep.
Are origination fees financeable in the mortgage?
They are not financeable in the mortgage. They
So
are
that's-
paid up front. It's
so
part
that's-
of your closing costs.
It's very similar to the buyer, or the way you're doing it with the investor.
Exactly.
Okay, because that's just considered basically origination fee.
Correct.
So similar to a point.
Right.
Yeah.
But has nothing to do with your closing costs, and it has nothing to do with the mortgage. We are two complete separate entities.
Okay.
Yeah.
So you're Green Tree, your investor's somebody else.
Correct.
And you've just kind of married the people together.
Right.
In order to get them into a home.
Exactly.
So, all right, here's one that I was asked recently by someone kind of close to me. They have a parent who owns a home.
Okay.
And that parent wants to downsize. But they don't have enough money to buy the new home first. And they really can't qualify for 2 mortgages, so they have to make a contingent offer. And those aren't getting accepted right now because
Right.
there's too many offers on homes.
Right.
What can that person do?
So they can do this cash offer as well, but go through it with cash and actually purchase it from the investor. Okay. And that's a whole separate situation in itself.
Wait, so the investor will buy it for me
Correct.
and then kind of work with me while I get my way into it?
Exactly. And then
So you're a bridge loan. That's a bridge loan.
it is a bridge loan.
Okay, so this solves so many problems.
It solves so many problems. But just keep in mind, each buyer's situation is going to be completely different. And that's why we want to go through the program and find out what's best going to meet their needs. It's not, okay, the investor's going to buy it, he's going to sell it back to you, this is the fee. It's a case-by-case basis to make sure that it's a win-win for everyone.
So it's not a guaranteed bridge loan, but it's something it's a tool that you have that
Correct.
you could potentially use if somebody needs it and if they qualify.
Correct. Absolutely.
Right. Okay. Because that would be a situation with someone I know who has a very small mortgage on their primary home.
Right.
They want to move to another home. All of their equity and cash is locked up in
Right.
that home,
Right.
which they'll get as soon as they sell. And
Sure.
in this market, they're going to sell it. You know.
They are.
Yeah.
Because of the lack of inventory, it's not going to be on the market that long. I mean, statistically, real estate has always been the best investment that you could make.
I've always made. Yeah.
And somebody that is just looking to start investing, one of the things that I always tell them is the duplex situation, right? Do you know, right? You know this,
Yeah,
that let's say my son, who's 25 years old, wants to purchase a home, he's a first-time home buyer. He can purchase a duplex, which means he's going to live in one side, he's going to rent out the other side, and he can get an FHA loan for that and put 3.5% down. I can use 75% of the rental income for the unit that he's renting out to help qualify for it.
This is called a house hack.
Is it called a house hack?
This is a new word for this. We've talked about this on other shows. It's called a house hack. And then we have a video on that. So we'll put the link down in the comments.
Okay.
But it was so great having you here. And I am so happy that you came.
Thank you.
If anyone has any questions at all about mortgages, interest rates, please ask them in the comments below. And we're going to put some links to Deanne's programs so that you can make a cash offer in the comments as well. And we want to hear what you have to think. What you have to say. I don't want to hear what they have to think. I want to hear what people have to say.
Always.
So,
very curious.
Please let us know down in the comments as well. Deanne, thank you so much for coming in. It was a pleasure talking to you.
It was so great. This is a great platform. Thank you so much.